Are you interested in investing in the stock market but don't know where to start? Does the thought of picking the wrong stock and losing all your money keeping you up at night? Don't worry, we're here for you. Welcome to Wealth Magnet, your source for all things related to living your best financial life through education, motivation, and mentorship. If you enjoy our content, don't forget to like, subscribe, and hit the notification button. Also, we appreciate all our viewers and want to hear from you. Please leave us a comment, a question, or even a suggestion. We love to engage with our audience. We release 5 videos per week meant to inspire and teach. Okay, now back to the topic at hand. Are you dreaming of a future where you can sip cocktails on a beach living off your investments? Well, I hate to break it to you, but it's not going to happen overnight. But fear not. In this video, I've got you covered with a step-by-step guide on how to get started in the stock market as a beginner. We'll explore the fundamentals and lay the groundwork for building your investment portfolio. And the best part, it won't cost you a dime. No hidden fees or expensive courses here. You know, the reason I personally invest in stocks is pretty simple. It's all about passive income versus active income. Let me break it down for you. See, there are 2 ways you can earn money. The first one is by going to work every day, whether it's in an office, on a construction site, or dealing with customers. It's called active income because you actively work for it, right? The second type is passive income, which is where the real magic happens. You own an asset, like a stock, that generates income for you without you having to put in any extra effort. It's like money rolling in while you sit back and relax. And that, my friend, is the main reason why I think investing in stocks is a smart move. You don't have to work for every single dollar you earn. So, basically, a stock is like a little piece of a company that you can own. Let's say you have a stock in Coca-Cola. That means you become a teeny tiny owner of Coca-Cola. It's kind of like joining the fourth square of Robert Kiyosaki's cash flow quadrants, where you're a part owner of a business, but you don't have to actually work for the business. So, if you want to buy stocks, you'll need to sign up with a brokerage company. Don't worry, it's not like the old days when you had to rely on shady Wall Street brokers. Nowadays, there are well-established companies with a proven track record that you can choose from. If you're a beginner and looking for a cheap option, Robinhood and Webull are quite popular. With them, you can buy and sell stocks for free. On the other hand, if you have more money to invest and prefer a platform with a longer history, consider checking out companies like Charles Schwab, Fidelity, or TD Ameritrade. Signing up with them is pretty straightforward, especially if you're in the USA. Just do a quick Google search, visit their website, and fill out a couple of forms. That's it. Step 1, find a stockbroker. Done. Okay, so here's the deal. A lot of people mess up when it comes to investing. They get too greedy and skip the important groundwork. Instead of making money, they end up losing it because of uninformed and foolish investment decisions. So, the key is to figure out your investing strategy and which stocks to choose. I'll walk you through a simple approach to investing and talk about the pros and cons. You can then move on to more advanced investing strategies. Alright, let's get started. The quickest and easiest way to get started in the market is investing in index funds. This is a laid-back style that tends to perform well over the long term. It involves investing in index funds, which are diversified portfolios that track a specific market index. With this approach, you don't need to stress too much about picking individual stocks. If you are not into spending time researching and analyzing different stocks, passive investing in an index fund is the way to go. It's pretty amazing because index investing actually outperforms most other investments over the long term. It may sound unbelievable, but it's true. That's why even Warren Buffett recommends it to most investors. Basically, an index fund is like a basket of stocks that tracks a specific group of the market. For example, the S&P 500 index funds consists of 500 large stocks that reflect the American stock market. The Vanguard Information Technology Fund includes over 300 US technology stocks, focusing on the tech side of the market. Then there's the Vanguard Dividend Appreciation Fund, which tracks a group of 247 companies. These are companies that have consistently increased their dividends for a long time. So you can choose to invest in index funds that cover different areas of the market depending on your preferences, making you wonder if there's a catch. But sometimes, when it comes to investing, less is more. As Warren Buffett once said, one of the best propositions for you is a very low-cost index fund where you don't invest all your money at once. If you consistently accumulate a low-cost index fund over 10 years with regular contributions, you likely outperform about 90% of the people who start investing around the same time. To buy an index fund, all you need to do is enter the ticker symbol of the fund you want on your brokerage account. Whether it's a global market index fund, a real estate fund, a healthcare fund, or even an OnlyFans fund, just making sure you're still paying attention. But think about the sectors of the market you want to invest in and start from there. So here's the deal. Don't sit around and make every excuse not to start investing. Just follow these simple steps. Do your initial research and make sure you have a decent grasp of the basics. But hey, you don't have to become the next Warren Buffett before you get started. Just dip your toes in the water by buying your first stock or index fund. Keep in mind that you can also buy individual stocks and it doesn't have to be super expensive. You can snag a share of Ford stock for $14, Nokia for $4, or Coca-Cola for $61 a share. Start off with a small amount of money and learn as you go. The worst thing you can do is wait, lose your motivation to invest, and end up not investing at all. So, take the plunge and get in the game. You might be wondering where the stock market is right now. It's been quite a remarkable 13-year run for the bulls, with prices consistently climbing. But are we heading towards a crash? Well, when it comes to investing, it is important to take a long-term perspective. This is a lesson I learned from Warren Buffett. We need to think about where the market will be in 5 or 10 years. Based on its history, it's likely to be even higher because the businesses represented by stocks keep generating profits and their earnings keep growing. So, even if we decide to buy stocks now and, heaven forbid, there's a crash, it's important not to panic and sell everything. Instead, we should follow Buffett's lead. Buy more stocks when prices are lower during a crash. That's when the real opportunities for profit arise. Moreover, if we invest in high-quality stocks of companies that generate income, add value to their customers, and innovate, we can still make money even if the market experiences its ups and downs. By investing wisely, we don't need to worry too much about a crash. Okay, let's recap. Start by testing the waters with an index fund and don't be afraid to make mistakes. It's all part of the process, and you're bound to make a few along the way. Gradually, you'll become a pro at investing and, who knows, maybe even build a portfolio that lets you retire comfortably. That's the ultimate goal, right? Best of luck on your journey in the stock market. If you found this video helpful and informative, please give us a like. If you are new here, please consider subscribing. Thanks for watching!